The war in Ukraine and summer heatwaves of 2022 have increased the focus on two societal debates: food security and the environmental sustainability of the way the world feeds itself. Plant-based protein offers a potential solution. For the past few years, plant-based protein sales have been steadily growing. During the pandemic years, alternative meat burgers with their carbon-friendlier footprint were in. Traditional meat patties with their high cholesterol were out. Or so it seemed. Today, the plant-based protein category is suffering a bit. Data shows that US retail sales have been sluggish this year, rising just 0.3% over the same period last year. So what does the future hold for investors? Our analysis leaves us optimistic, with the plant-based protein industry showing a base case compound annual growth rate of 16% to 2027. That would take its share of the overall meat market to roughly double what it is today. Health reasons, combined with investors' and consumers' growing interest in the environment, are two factors driving this. Greenhouse gas emissions from alternative protein sources is a tiny fraction of those from animal protein, making the category a potentially important contributor to a more sustainable agriculture. But just how much alternative protein products will grow in the coming years hinges on two big challenges. UBS Evidence Labs data shows that taste perceptions remain a big barrier to growth. 58% of consumers state that taste is the number one reason why they are unwilling to try plant-based meat. 55% of consumers say that improved taste might convince them to try these products again. The second challenge is price. We have noted that across 3 quick-service US restaurants, the price premium of plant-based meat alternatives ranges between 28% and 121% over meat. UBS Evidence Labs data shows that the cost relative to meat weighs heavily on consumers' decision not to try plant-based protein. It is also the reason many people who have tried them do not continue consuming. Estimates suggest that, at the current rate, it could take between 5 and 7 years to reach price parity. But the war in Ukraine, which has sparked inflation in agricultural supply chains, could cut this timeline significantly, with higher prices likely affecting meat more than plant-based alternatives. If the alternative meat category can improve taste and price, it should leave investors with a healthy appetite for the sector over the coming years.